Morning. How is everybody doing on this delightful day? It is Tuesday, August 22nd. This is the Daily Plan, and I'm your host, Joe Boss. And man, made some upgrades to that range probabilities indicators. Thing kicks ass. Man, this thing totally kicks ass. First off, major outlooks today. I mean, I may go on a rant or a rave here about the shitstorm that's a brewing here into the end of the week and into next week. But right now, things are cool, calm, and collected for today. Going into tomorrow, we have flash PMIs, and Lord, any sort of downside surprise on those, it's gonna hit every country. Like all of FX is gonna go right to the yen and right to the dollar. It's gonna be for people who don't know what they're doing, it's gonna be a hard couple of weeks here. People are gonna get chopped up hardcore going into this next. Also, you guys see this stuff? AK-50 guy is now going into Congress. Freaking yeah! If anyone should go into Congress, it should be that guy. I don't think he's gonna have any problems winning. You can see here we have some trade plans here. You can check out all the trade plans that I've been just sharing and throwing out there. A bunch of trade plans here, and this is all public. You can check this out, and they're all time-stamped and whatnot. And then this is stuff in the trade group. Anyone who's in the trade group who wants to hop in and join in on the stream, you can come in and hop in for the stream. And I'll go back to doing like going hop into. Actually, you know what? I'll go ahead and do this. Let's copy the title of the stream and do this. Yeah, it's pretty catchy music, huh? Alrighty, so if you want to hang out with me during the stream or after the stream, go ahead, hop on in. And that should send a notification to everybody who's in the Discord. Hey, we're doing stuff. And also I'll post a link to the live stream here in the chat. All the good maintenance stuff, right? All the good maintenance stuff when all the stuff should already usually be done before a stream happens, but you know, it's a one-man show. Come on, give me a break. What's it about? Guys. For real. That is nutty what happened today here. And just check that out. Look at that peak right there at the peak in your... You know what's crazy? You know what I just saw? I just saw this statistical probability-based indicator load faster than the damn pivot points. Check this out. Look, they're coming in first. And then the pivots come in. Oh my god, I've made such a huge speed improvement to this is now the upgraded version of the range probabilities indicator. It's now loading faster than the pivot points. Oh my freaking god. Anywho, I mean, guys, doesn't this look obvious, though? Like, yeah, of course, you'd probably take a shot going short right here, because there's a peak in your distribution. I mean, you could go ahead and use pivots, and maybe you'd be looking at, like, standard bullish range, where it's like, oh, man, I should buy right around here, and exit right around there, right? But look how much time you had, like maybe a microsecond, a few, like maybe 15 seconds price traded here, maybe not even that. Your entry you've had to have already limit into your entry at central pivot to catch this trade to the upside. And then what's the setup to the downside? You'd have to do counter trend bearish. for the day. And it would have just taken you down to here. Well, don't you know? Don't you know that the likelihood that you get your low for the day is, well, actually now you're going pretty far here. I mean, the low's probably in on the day now, but you definitely could take another step lower for like another anywhere between 13 and 20 pips. Anyone saying hey in the chat here? Good morning, James. Nice to see you. So yeah, no, this is very cool. Very, very, very cool. No longer are we restrained by the buy and sell boxes in the pivot points. Don't get me wrong, I like having the pivots on my chart right now because it's good reference. Like, oh, here's R 1.5 at 109.268. And that's roughly where this peak in the distribution occurs. All right, cool. And then here is where we get some uniformity, and the statistics, the probability of getting your top for the day is spread out evenly throughout this whole price range right there. So maybe stop at R2 if you're going short here. Makes sense, because effectively trying to guess where the top comes in on the day around here is a guess. I mean, you can argue maybe there's a peak right here. Maybe you can argue, because you see the probabilities increase slightly around here. So, I don't know. It seems like if you're chopping things up between, oh, maybe I can get a short here because there's an extra % of probability there, or an extra 0.5% of probability there, that you're really trying to cut it thin on why you want to get into the damn trade. That's like the gambling mentality coming through, right? Like, either it should be painfully obvious and probable, and you can say, like, oh yeah, here's my likelihood of this trade working out right now, here, today, and then also have the wherewithal, because this is a discretionary system, to do your damn trade research, because we're not doing any here today on the stream, to, you know, like, learn about what's going on with the UAW, learn about what's going on with possible reacceleration and inflation, right? Because UAW goes on strike, they're going to vote on that this Friday, and Powell's going to be giving it his economic outlook on Friday, and these flash PMIs, they come out bad, it's going to get real bad. God, Europe right now is just hoping that those flash PMIs come in hunky-dory right now, because last time I checked, like, the next spot is like way down here for maybe where you go down. Like, you're guessing how far down you go into the end of the month if the economic data actually is bad on Europe. And I mean, these ranges between pivot points are like 120 pips. Yeah, this gets kind of serious on the skew side. Like, you don't want to be taking any guesses here on the month where the low's going to come in here on euro dollar. Let's see here. Now I want to learn how to add to this. Yeah, man. I mean, I looked out. You know, I didn't post the trade, but you guys saw already what I was doing, right? On a 2-hour, I got this thing here because I was looking at it on the day, and I got that short. So I feel like I literally did the trade that I just described, and you know, I'll probably have to just post it after the stream in the trade group that I did this. But either this thing goes down to here today, or hell, I mean, in all seriousness, I would love to swing this thing lower, because I think, based off of the data I've seen so far of expectations for the flash PMIs, that it's pretty bad. And also because the future outlook right now, I mean, guys, student loan repayments are starting up again in the United States, and that's going to eat into consumer discretion. You know, to a degree, it's not going to like totally upend consumer discretion spending and household spending, but it is going to hurt it in a somewhat meaningful way, like in a moderate amount. It's like, could the US survive? Yes. But when you include like 3 or 4 other factors on top of that, in with the same magnitude and the same intensity of impact on spending and inflation, like oil prices going up and China slowing down. I mean, China's probably going to continue slowing down, and they're trying to stimulate their economy, and they're afraid of stimulating their economy. I mean, look what they just did. They stimulated their economy, and that gave everyone like Aussie dollar. That gave Aussie dollar a nice little reprieve here at the very beginning of the week. And then they were anticipated to do it, some more stimulus, and they went kaputs. And now this is probably, literally, that was probably the top for the week. And you could see like all these extra trade plans that I was doing, like, yeah, probably somewhere up here. And this is the new version of the indicator that loads like instantly. I'm so happy with how performant it is. Yeah, man. Check that out. There's your peak in your distribution. Yeah. Take some shots there, and then, I don't know, stop out right here where your probabilities get thin. On Euro New Zealand, NZD. Oh, man, you know, now that oh, wow. It finally went down. Oh, my God. Yeah, James, I know you've been taking a shot. I hope you've been using like 10, 20 basis point setups at a time, because, dude, like shorting this. Don't get me wrong. So long you're using like basis point setups, that's gonna keep you alive if you lose 5, 6, 7, 8, 9, 10 times in a row. That's just how the math works out. That's why I'm, not an advocate of 1% risk per trade and of basis point trading. So, with that said, yeah, dude, there's probably some more downside here. I would anticipate going to, call it 1822. Like, that seems like the most probable thing to occur here for the next week. And as far as the day goes, this has moved so far so quickly. Like, look at that. That is nutty. That is absolutely nutty. Crazy moves. I mean, you could argue going short here, but it's just, unless you're anticipating the volatility from this bar to continue, which it did, then a continuation play shorting that S1 is fine. And that also lines up with some pivot theories that are out there on continuation trades for pivot points, buying R1 or selling S1 for continuation trades when you see these sorts of volatility spikes going into those levels. But it's also just much easier when you say like, oh, wow, we're going into thinner probability areas. Maybe I can anticipate us going into this spot where the probabilities bump up just a tad. Yeah. And this is just for the day. On the month, let's check this out for the month. Oh, yeah, that's right. I set the look back to 5,000. This is a chart that doesn't have 5,000 bars of data. And this still looks pretty much the same. Yeah, this is really sketch. In this sort of scenario, you got to use daily and weekly range probabilities to make your decisions, because here this is guessing. This is guessing at this point. Like, oh, I'm trying to go and swing for the month. This is kind of guessing where the top is going to come in. However, let's look at our closing odds for the month. So if we do this, let's go 3 here. So what's the probability that from the current price that we close below? Let's see here. It's like 88% of the time. 88, 89% of the time, the close for the month is below, call it 182.37. That's by no means a guarantee, because that also implies, hey, if something happens effectively 88, 89% of the time, that 11 or 12% of the time, the damn thing rockets up and continues. One reason why that would happen in this case with Euro New Zealand is because the New Zealand dollar has just been getting hammered. I don't know how much of the Westpac and ASB outlooks and, you know, those New Zealand banks, but dude, everyone who does any analysis for or does any banking business in New Zealand or Australia will preach from the rooftops how horrible it is right now economically. Like in New Zealand, they want their currency to get weaker, like so it'll at least give them some reprieve. Let's see here. Take a look at 10-year bond, please. Sure thing, my man. And I'm not going to go too much in depth on that. You guys can just join the Discord and check out those outlooks and read them for yourself, right? Become an autonomous trader. Learn how to do this stuff on your own. Let's go ahead and do that. US 10-year. Well, my expectation was up so far. And this was last week. Yeah, check out those closing odds. You'll probably end up drifting up here, or you're going to get smacked down here. And I would anticipate that yields are going to continue to appreciate. Yeah, check that out. There's a spot here where a good chunk of your tops come in. So right there. And if Europe gets hit especially hard, you're talking 6.6 on the week potentially as like a really bad scenario. Yeah, but I think going to 4.4 is fairly reasonable. Fairly reasonable. Considering the expectation and the risks of inflation reaccelerating here in the fourth quarter are starting to go up, we should start to see these yields in the US also start to creep higher if we are going to realize that. Let's see, what else is there? What else could I go over? How about the S&P? We can check out S&P. Oh, check that out. We're at a bump in our distribution. I wonder if this is the top for the day, or if we're going to continue higher to up here around this R2.5, right? Are we going to jump up another 20 points, or is this the high for the day? Well, how about this? On a short from here, what's the probability that we close the day in profit? Well, you could argue we're like right here, so it's like 70, somewhere between 70 and 74% of the time you will end the day below the current price. That's no guarantee that we aren't just going to continue. See this trend line here? This is just a centered moving average. And this has just been going up, 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 and up. So no reason to anticipate this thing to slow down right now. It's at a high. It's not reversing immediately pronto right now. You still can slide up a reasonable amount. Like, unless you had your stop around the 44.40s, I don't think that there's decent shorting opportunity here. There's probably better setups in all seriousness on the short side, like here. But this trade's done for the day pretty much. Oh, NAS? Yeah, sure, I can bring up the NAS. Yeah, that stopped out, but look where it did. Also, that's a pretty peak to peak on the day. Yeah. And look at where it bottomed out right there. Add another peak in your distribution. Yeah. Let's check out. Oh, yeah, that's probably going to give you a rip roar and a tear higher. A big reason why people have bought into this is because of Nvidia. People are looking at the expectations for Nvidia. Ooh, it's at a peak right here. But look at the pre-market. The pre-market already opened way up here on NVIDIA. Dude. NVIDIA, what NVIDIA says this week, it's gonna, I mean, here's, the earnings is tomorrow on Wednesday. What they say will set a big chunk of the tone for the NASDAQ. Like, pay attention to what's going on with NVIDIA. Absolutely. And then as far as the UAW strike stuff, and is that just not loading? Here, let's see here. Yeah, there we go. A quick little refresh got that working. So GM has been tanking because all throughout here, for like literally the last 2 months, talks of a strike have been building up. And then over the last week, it's really got bad. And then here is Ford. And Ford is just, I mean, Ford is gapping down lower by a cent. Jeez, Ford, oh my God, Ford. Jeez. You know, Ford's looking, oh, that's Forward Industry. We want F. There we go. I'm like, this doesn't look like Ford. This looks like some weird ass, you know, penny stock thing. I'm like, no, it's F. See, you know, I know what I'm talking is when I was talking. So let's see here. Oh, check that out. There's probably the low for the week. Yeah, and you're pre-marketing higher. Alrighty. So probably around this R1, not the worst idea in the world to catch something, but then you got this slide here. You got this sort of uniformity in this spot right here. See how they go 5.5, 4.6, 4.8, 5.5, 5.1. Your odds become very similar. They're only off by like 0.5% to 1% here. It's just tailing off, and then there's kind of a cutoff here where you get into your tail at this point. So you got some risk here that you got to manage, and on any short at that spot. But man, this is, yeesh. That is, so this is UAW strike risk. And then Stellantis is another one. And you can also see since August, all the strike risk get coming in. Yeah, so August 10th. August 10th. What happened on August 10th? Why are the 3 largest auto companies in the United States dropping 5% on August 10th? Oh, it might have something to do with, you know, the oldest union in the United States organizing a huge strike against all 3 of them at the same time. And they're voting on it this Friday. And if they don't get what they want, they aren't going to be able to produce enough new cars. Not enough new cars means there's not enough supply of new cars for people to sell. So the demand for those new cars will go up. The price of those new cars will go up. And the people who really need a car and can't buy new are going to have to buy used. And suddenly now you're driving up the demand of the used car market. Oh, suddenly this looks very, very similar to the 2021 car market, where just there's no new car production. Everyone had to go to the used car market, and inflation soared because of the price of used cars. So you take that into account with student loans, oil prices, and frankly, just inflation on an absolute level, just having to grind lower from the place that it is at right now. Yeah, you're running into a covering everything, to be frank. I don't think I'm even covering absolutely everything that could potentially just blow up here. I mean, we have the hurricane, and there's going to be all sorts of damage from Hurricane Hillary here on the West Coast. God, we have the BRICS meetings starting today, going into Thursday. Here, I literally, guys, you know, FYI, go to Discord, look at this big post here I made on the 18th, and just follow up on a bunch of this stuff. And try and stay on top of this, because these are, you know, I've been reading a ton of outlooks just over like the last 2 weeks, and this is just a list of all the things that are like big deals. And there's no one outlook that I read that mentioned all these things all together. There's just too much stuff going on for any one person to know. So I just went through it all and jotted them all down, so then we can all work on it together. So, you know, please hop into the damn Discord and post some trade research and follow up on this stuff. And, you know, let's stay on top of these things, right? Let's see here. Will you be looking at layoffs? I mean, when numbers come out about layoffs, yeah, for sure. Absolutely. Let's see here. Oh, also, good time to remind you guys to leave a like. We're at the 30-minute mark. Usually it's like at the 20 to 30-minute mark. A lot of you guys will drop off in the recording, right? Most people only watch for like 10, 15 minutes. I get it. It's now like twice as long as a normal video. I mean, in all seriousness, I think I've pretty much covered all the like critical, important information I wanted to get out there. And as far as why this stuff, just to relate it to the video title, right? Because obviously I've talked about possible, you know, situations that could reaccelerate inflation. The big slowdown in China is going to hurt a lot of Australia. It's going to hurt a lot of New Zealand. A worse PMI could really hurt Europe. I hope those PMIs don't come in bad, because if Europe hurts, it's just gonna really make the dollar strong. I mean, there's a lot of catalysts here that, if they don't turn out well, can like really make the dollar get strong at this point. So I hope Nvidia has a good outlook. I hope Powell has a more dovish outlook on Friday. I hope that the BRICS don't instill a bunch of geopolitical fear. Like, I actually really hope things stay risk on to some extent from here, because, dude, like, look at where the S&P is at and how well it's been rallying over like the last couple of days. I'd love for some outperformance to come in, and then boom, you're up 1.5% extra on the week, and this entire drawdown goes away. And then the bulls start coming back more aggressively, and, you know, you start making some progress on, you know, building some more price data, getting through the wall, you know, climbing that wall of worry again, like what we did like all the way back here. Climbing the wall of worry. It was even bearish back here. I have a video on me being pretty darn bearish. Like, so many people, including myself, were bearish throughout this whole time. And now there are significant concerns for being bearish again that could like happen very, very shortly. And it's just a matter of, until those things actually materialize and realize themselves, it's probably not worth it to just preeminently, you know, short the shit out of this stuff. You know? So it's like, be cautious, wait till the things actually happen, and, you know, frankly, make sure you have like financial juice open. So then when new information comes down and changes future trading expectations, because a lot of people are just buying this rebound blindly, thinking like, oh man, you know, for example, a lot of guys are looking at Bitcoin and being like, oh man, you know, Bitcoin is down 12% here. I should just be buying Bitcoin right away, not understanding that guys, the people who are the largest miners in Bitcoin are mining Bitcoin for like $8,000 right now. The cost to mine Bitcoin is incredibly cheap for institutional miners right now. Like, those guys are just selling and selling and selling low any new Bitcoin that comes onto the market. There is more than enough Bitcoin on these exchanges. Oh yeah. Sorry. Thank you for pointing that out, Joel. Yeah, so there's a supply of Bitcoin coming in, and if these things start getting hard for people over the time ahead, you're going to probably see some more hits on Bitcoin. Like, you have to understand the future possibilities, the future expectations. What are the risk on outlooks? What are the risk on off outlooks? What are the reasons for those things? Come to a holistic expectation of what's going on in the future. And then as new information comes out, see if that changes your expectations in a meaningful way. And then you'll be able to autonomously and on your own, without anyone's help, be able to figure out, oh, I should just be long or short this because, you know, I have these reasons for being bullish or bearish. This new information came in. I should probably not be bullish, or I should probably become bearish, depending on what that information is. And that's why I, preach, oh, read your outlooks. Know the markets you're trading, like, to a T, and then have something to help you do valuations of like, oh, what's the probability of, I mean, look how ridiculous this is. Here's a bump in your distribution. Here's another little bump in your distribution. That, to me, on the week looked like an incredibly obvious buy. But just because there's a probability distribution thing giving me a percentage thing here, sure, there are people who mechanically trade. Oh, it's just like, it's just like, come on. I mean, when it comes down to mechanically trading technical indicators, there's people who do that all the time. Why can't we mechanically trade statistical indicators? Yeah, man, check out that low. And that's your probability of getting your low for the day between these two prices. Oh, you know what I wanted to do this stream? I wanted to have this music playing in the background on like really low volume. But I don't think I can get low enough. Soundtrack here I'm playing is from a game called Hawken. Man, I used to love playing that game. Yeah. I mean, I think I've given out my opinion here and my expectations and the things I said, these are risks that I'm looking at. And make sure you check out that list. Maybe follow up on it yourself, like what I'm doing. Because, man, staying on top of like news and important geopolitical, macroeconomic events, it'll keep you on the safer side. Because I mean, those sorts of events control tens of billions and hundreds of billions of dollars. And if you generally know the direction an economy is going, it's a little easier to figure out on a macro scale. It's a little easier to figure out the micro economic setup for like, oh, that macro factor will probably help this asset in a micro sense or something. Just know what it is you're trading. Spend the time understanding what it is you're trading. And then have some valuation model, and whether you're using TA, FA, sentiment, seasonality, statistics like what I'm doing, to figure out where is a good spot to buy or sell. Do your due diligence and figure out if that system's right for you in a way that encourages you to be autonomously making your own decisions. So then you're not having to go to me or anyone else. And that all is optional, right? All that becomes optional, is what I'm saying. So yeah, you know, it's that, dude. That's just so cool. That's just so cool. And then USD CAD. Wow. Look at that USD CAD. That looks like that's at a likely low. Yeah, actually, you know what? This is no shit. That's an actual setup here that I'm taking. So I'm technically in drawdown. I think I missed out. I thought that I for a second missed out on this trade, but thank God that's 20 basis points. So I am actually gonna buy this. Let's see here. 500. Okay. All right. Same stuff. I just got in here at this spot. Same stop. That's just what I'm doing. I'm just doing my stuff live. Okie doke, you guys. Wants to hang out and chat trades, do some trade research, because you know I'm not going to be doing trade research here on the stream, going through my email, right? So I'll go ahead and do that with anyone who wants to hang out with me in the daily plan chat, or anyone who's in the trading group. Come hang out. I'll actually go into the trading room from here. Yeah, there's a duplication glitch. There's a duplication glitch on Discord. Like, check this thing out, right? See that? Weird little duplication glitch. Alrighty, guys. Yeah, come hang out on the Discord if you want to do some more stuff. I've been your boss, Joe Boss, and I'll see you guys tomorrow for the next daily plan, where we will have the update on how those PMIs went for Europe. Thank you guys so much for watching. I'll see you in the Discord if you got any questions, want to hang out, do some research. And yeah, see you guys tomorrow.